And welcome back to Bitcoin Advisor channel. My name is Chris, bringing it to you here from Westlake Village, California. It is another beautiful Friday morning, and it is the end of the week. It is the triple witching. We've got $4 trillion worth of options expirations. I think $1 trillion of that is in the S&P. And I saw this interesting post here today on Twitter, getting more and more interesting by the day as Elon does take the helm here. And what do we have here? Triple witching, $4 trillion worth of contracts set to expire here. And interestingly enough, they have the S&P TA analysis, very similar to what we had been talking about. And that we are breaking back into the bottom side of this channel. And needless to say, I think options traders might be taking those profits, going home for Christmas, as Powell flew in as a bit of a hawk yesterday and spanked the markets. And I think NASDAQ was down 3% yesterday. Bitcoin down significantly and kind of breaking down. Did not get the continuation I think we were thinking at least I was thinking about. But I did make the video of it late yesterday saying, hey, we did pretty much hit the 18.5 target we were looking for. And we talked about really any kind of a 4-hour closure back below this pivot at 17.3 was going to get us back to the bottom side of the range that we were holding for some time at about 16.8. And I think you could extend this down here slightly and say, you know, any kind of a closure below 16.750, very likely we're going to come back to the bottom side of the range. However, I would say this is that because of the way the dollar is postured, I think it is likely that Bitcoin does not make new all-time lows before making a bit of a greater bounce. I could be wrong. However, this is Bitcoin on the daily, and we got rejected at the green 55, which we spoke about as a potential setup. And we're getting volatility expansion, and we said, hey, look, the Stokes are going to get the direction of the trend, the average move, about 20%. So we crossed down right here. We crossed down here on December 14th, 2 days ago. As we're coming into these highs at 18.5, crossed down, and you know, lo and behold, we're getting volatility expansion right here on the 14th. We'd expect the price to go in the direction of the momentum, right? So momentum was to the downside, 20% move in either direction. So let's see, from the high, 20% would get us down to new lows at our 14.5 target. So interesting enough, that is something to keep an eye on. And, first warning sign would be I would say even a 4-hour closure back below here, below this wick at, call it 16.7. I'm looking for a shot back to the range lows, somewhere around, 15.960. And if we start to lose this area here at 15.4, that would be the nail in the coffin for much lower prices. Let's see. We've got 2 weeks left in the year. So does the bi-weekly give us any information we should be looking at? Bi-weekly is crossed up and will remain up above 16,000 bucks here. We have 2 days and 8 hours left on the bi-weekly. So 16,000 going to be a critical pivot there on the bi-weekly, and the weekly Stokes are crossed down. Volatility is expanding. We'll cross up today above 16,640. Sunday for spot price, and CMEs is today, and will cross up above 16.5. So that's going to be a critical pivot on the CMEs, and kind of our first warning signs that potentially we could get the bounce we're looking for, and another attack at the 18.7 region, with potential for more. And I do like the idea of us coming back into this trend line, just going back again. This trend line here on the daily time frame, also a major area. And we did talk about, hey, potentially some kind of attack into this zone. price action doesn't always move in a straight line up or down. And I do think there's a possible threat of that as well. Again, based on the dollar's posturing here. And what I'm talking about, the dollar is finally, taking a bounce off the box of peace and prosperity or death and despair. Below that box is peace and prosperity. And, if we take a bounce, and really I would say this is now the critical region for the dollar. And I would expect the dollar, if it does start closing dailies above here, that we do ultimately mount an assault at that green 55. And that is going to be the 0.5 in the 618, coming back from the all-time high on the dollar in the last bull run. And let's see if I'll move that back down here. So so if the dollar does mount an assault at that 109 target, 110, I would expect risk assets to pull back first quarter. Okay. However, if the dollar does something like this and just takes a little measly piddly bounce up here and then breaks back below here, yeah, I'm looking for, risk assets to take that bounce kind of going in the first month or two of next year, perhaps. Even with, the bad economic data or the spanking from Mr. Powell yesterday, I think the prospect of, whatever happens to the dollar is going to weigh in on markets even more. However, additionally, I think, if we do get a low inflation print coming in January or February and show that trend is down and, perhaps they do another summary of economic projections with a federal funds rate that is a little bit lower than 5.1%. By the way, I have that summary of economic projections back up here again. Federal funds rate is projected to come in at 5.1% for 2023 and 4.1% for 2024. And what does that mean? That, 30-year fixed rates on mortgages, I'm thinking above 7%, probably around 8% at some point. So that's, again, my analysis there with Dixie, kind of still in a, no trade zone for me because the dollar has not really made a decision. However, the hawkish Fed, he may have made the decision for us and kind of blew the candles out on a Christmas rally for equities and for Bitcoin. And this is the chart they were just talking about on this tweet here. As we break back down to the bottom side of this channel, it's had, 3 attempts at higher highs. Now we have a lower high and a lower low, followed by, lower low, lower high, and daily trend change. So that is not looking good. And ultimately, I'm a little bit more on the bearish side. And until we start closing dailies above this, trend line up here, I would say risk remains to the downside in equities. All right, that's it out of me today, guys. I hope you have a blessed and highly favored day. Let's catch up next week. Take care. And last, I'm going to mention this Trump NFT. So the Trump NFT collection just sold out. Prices are surging. According to the data from OpenSea, collections on the floor price is about 0.19 ETH or $230. They were retailing at $99. So Trump NFTs already sold out. I think it's pretty funny. I guess Trump's a little more Bitcoin bullish than we expected. All right, that's it, guys. Take care.